Anyways, rate hikes. What is going on with rate hikes? Rate hikes all over the way, all over the place. And surprisingly, after China puts on restrictions on its capital outflow, a lot of countries are now looking to raise interest rates. Now, let's go over some of the basics before we go anywhere, okay? What happens if interest rates go up? Okay, these are questions that people ask for. We're going to go over them really quick. Changes in interest rate affect the public's demand for goods and services and thus aggregate investment spending. A decrease in interest rates lower the cost of borrowing, which encourages business to increase investment spending. Okay. Are stock prices affected by interest rates? That's another commonly asked question. When the Fed increases federal funds, it does not directly affect the stock market itself. The only truly direct effect, it becomes more expensive for banks to borrow money from the Fed. But, as noted above, increase in the federal funds rate have a ripple effect. Okay, let's keep going. What happens when you raise interest rates? What happens when interest rates rise? When the Fed increases the federal funds rate, it does not directly affect the stock market itself. Only direct effect becomes more expensive for banks to borrow. We did that. Okay, why higher interest rates are good. Whenever interest rates are rising or falling, you commonly hear about the federal funds rate because higher interest rates mean higher borrowing costs. People will eventually start spending less. The demand for goods and services will then drop, which will cause an inflation which will cause inflation to fall. Again, keyword, which will cause inflation to fall when interest rates are risen. You don't want to go into inflation. You don't want to go into inflationary periods. Economies do go from inflationary periods from time to time, which sometimes is a good thing for trades and stuff, but it's very bad. It's very less attractive when it comes to foreign investing and stuff. So what happens to the value of the dollar when interest rates rise? Generally, higher interest rates increase the value of the country's currency. Higher interest rates tend to attract foreign investment. I just said that. Increasing the demand and value of the home country's currency. So basically what happens, this is why when you go to Mexico, they prefer the US dollar or they prefer the Canadian or any other dollar besides their own currency. So they value and they favor other countries' currencies, but they're even their own. It's a safer haven than the currency they have in their country. What investments do well in inflation? Real estate is a popular choice not only because rising prices increase the resale value of property over time, but because real estate can also be used as a generate rental income. Gold is a good popular inflation to hedge. I said that last week and the week before. Gold is the best inflation against the best inflationary tool against rising interest rates or inflation. Against inflation. The best inflation hedge is gold, and I keep talking about that all the time. Oil, stocks, and inflation indexed bonds. So I wanted to read those out to you guys. Sorry, my vision's kind of blurry. Once again, it is plus, I think it's 33 degrees in this room. 34 degrees Celsius, so it is very hot in here, and I'm already building up a line of sweat here,